everyone. So in this group of videos, we're going to be discussing the statements of net income and comprehensive income. So to kick this discussion off, we're going to be looking at two different formats of an acceptable income statement. And the first one is the multi-step income statement format, which is the one you will most likely see when you're looking at an annual report. But a multi-step income statement reports several critical subtotals before computing income from continuing operations and net income. And a single-step income statement, it combines all of your revenues and gains into one category and all your expenses and losses into another, and then subtracts the two to get net income. Probably you remember that most from your introductory financial courses. Now, obviously the multi-step income statement format will provide more useful information for stakeholders when they're evaluating and predicting performance of a company than does the single-step income statement because the multi-step clearly separates key performance measures. So let's take a look at what those key performance measures are in a multi-step income statement. So the first one on a multi-step income statement, we take our revenues minus typically our largest cost, which is cost of goods sold, to get gross profit. Then from gross profit, we subtract out our operating expenses to find operating income. From operating income, we would subtract our tax, or from operating income, actually, we would add our other revenues and subtract our other expenses to get income before tax. And then we would have our income from continuing operations. And from income from continuing operations, we would then subtract our tax to get our net income. And then below the net income, we always have an earnings per share schedule. These subtotals help your financial statement users evaluate past performance as well as predict future performance. It also assists them in assessing risks or uncertainties of achieving future cash flows. Because a multi-step income statement clearly separates these key performance measures, the majority of U.S. companies, about 85%, actually use the multi-step income statement format. So let's look at the different sections of a multi-step income statement. The first one is the operating activity section or operating section. This is where you would see the revenues and expenses that are related to the major operations or the day-to-day operations of the business. The second section is the non-operating section. Here you'll find the revenues and expenses that are generated from activities that are unrelated to the day-to-day operations of the business. And the next section is the income tax provision. This is where your income taxes that are due related to all your continuing operations of the business would be located. And then if we have any discontinued operations, that would be next. That's where the income from operations that are not going to be continuing forward or contributing to operating income moving forward, this is where that information would appear. And then, of course, the net income and earnings per share would be last. Net income, of course, being the bottom line. And below the net income, again, we report the earnings per share, which is the earnings available to each shareholder in a company from the continuing operations of the business and from the operations that are being discontinued. So in the next couple of screens, we're going to look at some examples of these actual formats, the single step and the multi-step. So let's look at those now. So here we have our single step on the left and our multi-step or a partial multi-step on the right. And you can see again with the single step, we've grouped all of our revenues and gains together, and we've grouped all of our expenses and losses together. We subtract those two to get our income from continuing operations. Just like on the right-hand side, our multi-step income statement, you now see those key performance measures as we go down the income statement, the gross profit, the operating income, the income from continuing operations before tax. And then this statement is so longer than this single step that I have to put the second part on the next slide, so then we can continue forward with the fourth key performance measure, which is income from continuing operations. The fifth key performance measure was net income, and the last key performance measure was earnings per share. And again, that is the difference in a multi-step and the single-step income statement. So oftentimes, due to this large multi-step income statement that, again, carried forward on another page, companies oftentimes use what's called a condensed income statement. This allows companies to see what's most important to their discussion at the time. Now, you can see, for example, other revenues, gains, and expenses and losses have simply been grouped together into one line item. That just allows the stakeholder to focus on one thing and forget about all the minutia that might be floating around in the income statement that's irrelevant to their decision making. Now, just because a company uses the condensed income statement format, they still have to include all the information that made up that line item in either a footnote or the notes to the financial statements.